Every single day, there's this digital heartbeat thrumming from millions of online conversations. So today, we're going to dive into that emotional side of the market. We're talking about social media sentiment analysis, one of the most fascinating and, frankly, powerful new tools for understanding what really moves money.
And this quote, it just hits the nail on the head, right? Behind every single chart, every stock price, you have people. People with feelings and biases. For centuries, that emotion was just out there, impossible to really measure. But now, it's being broadcast 24/7, all across the internet. And that's the billion-dollar question, isn't it? What if you could actually capture all that online chatter, the good, the bad, the crazy, and turn it into a measurable signal? Well, guess what? That's exactly what this technology is all about, and it is a total game changer.
Okay, so first up, the market's digital heartbeat. We're going to tap into that raw, unfiltered voice of the crowd because that's where this whole story really gets started.
Just think about it for a second. We all know a single tweet can move a stock in minutes, but it goes way deeper. When thousands of people suddenly start posting about, say, recession fears or a new crypto bull run, you're literally watching crowd psychology shift in real time. This is that whisper of the web, and it almost always happens before the big news headlines. And by then, the real move might already be in the rearview mirror.
So, how in the world do you take millions of random posts, comments, memes, all of that noise, and turn it into something you can actually use? Well, that's where the magic of AI comes in. At its core, it's pretty straightforward. It's about using artificial intelligence, specifically something called natural language processing, or NLP, which is basically teaching computers how to read and understand human language at a massive scale. The goal is to collect all that chatter, figure out what it means, and get a read on the overall market mood. And here's a look at how it actually works. First, the algorithms scan everything for keywords, like nifty bullish or buy the dip. Then it sorts every single post. Is this positive, negative, or just neutral? After that, it bundles all those posts together to create an overall sentiment score. And finally, by watching that score over time, the system can spot these really important shifts in the market's mood. Now, this is where it gets really fun and, honestly, super tricky. Look at the language difference here. A traditional analyst says bullish outlook, but on Reddit, they're saying to the moon with a rocket emoji. An over-leveraged asset? Nope. On social media, you're just a bag holder. The AI has to learn all this slang, the sarcasm, the memes, the emojis. It's a massive, constantly evolving puzzle. Okay, so the big question, does this stuff actually work? Let's get real and look at some of the biggest hits, and of course, some of the spectacular misses. Of course, we have to talk about the GameStop saga. This is the classic example. The chatter started bubbling up on Reddit way back in late 2020. By January 2021, the volume just exploded. The stock price went vertical. And only then did the mainstream media finally catch on. And this is the key. Social media didn't just reflect the mood, it created the move. And yeah, GameStop isn't the only one. We've seen sentiment analysis nail crypto bull runs and catch early earnings rumors before they're officially announced. But, and this is a big but, it's not foolproof. The system can totally get tricked by short-lived hype around a new meme coin, or by viral false alarms, and even by coordinated pump and dump schemes that are designed to fool it. So, here's the most important thing to remember from all of this. Sentiment analysis is not a crystal ball. It can't predict the future. The best way to think about it is like a new kind of weather report. It gives you incredibly valuable info about the current conditions, but it's still just one signal you need to consider. And because it's just one signal, that brings us to what is maybe the most important part of this whole equation, the part that happens after the algorithm does its job. It's all about human judgment.
Exactly. Think about this scenario. You see a sentiment score for a small cap stock, and it's 80% positive. So what does that mean? Is that real, genuine excitement from thousands of investors? Or is it a coordinated trap set by a small group trying to pump the price before they dump their shares on everyone else? The raw number alone can't tell you. Context is everything.
This is why the smartest traders view sentiment analysis as just one piece of a bigger toolkit. They're using it to confirm what they're already seeing on their technical charts, what the fundamental news is saying, and what the big economic indicators are pointing to.
If your charts are screaming breakout and then sentiment suddenly flips super bullish, well, that's a huge confidence booster. It's a powerful confirmation tool.
All right, let's make this really practical. How can you start using this to get your own market edge without falling into some of those common traps?
So here are 4 simple things you can start doing like today. 1, just pay attention to trending finance hashtags on platforms like X. 2, go play around with free tools like the Crypto Fear and Greed Index. It's a great way to see this data in action. 3, and this is the big one, always cross-check what the sentiment is telling you with your own analysis. Don't trade on it blindly. And 4, start a little watch list of stocks or assets that seem to be really sensitive to social media buzz.
At the end of the day, social media isn't just a distraction anymore. It has become a legitimate data stream that both reflects and drives the market. By learning how to decode it, you're gaining a much sharper awareness of the psychology that's shaping the prices of tomorrow. The web is talking, so the real question is, are you listening?